the thing is on these that it wasn't so long ago that basically people were, I guess you could say, they were banking on the appreciation. So they would buy these homes and borrow a lot of money to get into them. And again, maybe they didn't really have a positive cash flow at the time. In other words, they were paying out more than the rents that they were collecting. So they were having to come out of pocket in order to carry these places. And they were thinking, oh, property's appreciating so fast, I'm going to be able to turn this thing around and sell it, and I'll make money, and it's all going to be okay. Then suddenly, though, of course, as we've all seen, it didn't happen that way at all.
It changed. Things changed, and we had investors that we knew that were buying houses in Florida for $500,000 and buying two. And you're just wondering, how does that ever make sense? It never did. And I think one of the things that a savvy investor does is they're contrarian by nature, which means when everybody is buying in, they're exiting the market. And when everybody's getting out, they're maybe getting in. And that's a time right now. I think there are opportunities. And our area, the Silicon Valley, is strong. From an economic perspective. The property values are strong here, and they're beginning to come back. And Robert Campbell, one of the economists that we host, he's a buy signal for San Francisco right now. And that's because the numbers are getting stronger there, and his economic data is telling him.
So it's just the economy, the work that's available, and so forth. And but again, we never got. I mean, you see homes in other parts of the country that it's impossible for us to fathom that you could buy a home for $30,000 or even $100,000. I mean, we can see maybe now you can find a few condominiums in some areas of our valley, Santa Clara County here in California, that you may find, like 100, 150. 200 seems like, wow.
Yes.
But
so that's a big change from how it was, Mike, 5 years ago.
Yeah.
And when I look at the houses that we purchased in Texas, and they were in the most expensive was $130,000. So to get that in perspective, I've never lived in a house that's probably as nice as any of these. They're very nice houses, but land is immense in Dallas. So the price of land here drives up the cost, and the building costs are more here. So, a house that's $600,000 here is, you could get it for $80,000 in Dallas-Fort Worth.
It's just amazing, amazing. So, so what sort of, if we do have a little time, what sort of thoughts do you have as far as, you've done a lot of interesting things with SJREI as far as having seminars and other things. There's maybe some big plans that you have in the back of your mind.
Well, one of the things that we have done that people said to me, that doesn't make sense to do that right now, is we do a journal, and we print 6,000 copies of that. It's a free publication. And it has really gotten a lot of information to investors out in the community. And people were saying, everyone is doing things online, Geraldine, that won't work. But we have it online also, but it has worked very well for us. And I think that we try not to focus on the negative at the SGREI. There's a lot of negativity out there. We host people like you, Mike, who will talk about tax strategies, because we know with all the debt we're incurring that taxes are going to increase. And so being proactive and aware of what's in the pipeline, we have found that to be a very effective strategy for us. Yeah.
So trying different media, trying different ways of getting outreach. Now another thing that's coming up actually as a community service, you're actually going to be hosting a program coming up here next month, isn't that right?
Yes, in August, on August 10th, we're going to have an event, and it's for people who are behind on their mortgage payments. What are your options? And we'll be talking about loan modifications, foreclosure, short sale, and finally bankruptcy. And we'll have some government entities available to as resources for people, because there's still a lot of people who are unfortunately being taken advantage of with the loan modifications, where they're not very effective, and a lot of people are in houses that if you modify the loan, they'll still lose the house within a certain period. I mean, statistically, there's data that, you know, illustrates that. But so what we're trying to do is just show people the options that are available, and give them the information they need so they can just handle their situation effectively.
We hope.
We hope.
Some of these people have, unfortunately, they have very limited options about what they can do. But in the loan modification area, I mean, we've talked about it here on our show from time to time and so forth, but basically it seems like it's just not happening. I mean, so
it's not happening.
It's like an exercise in frustration, that you go to all this effort to try to make it happen, and then sometimes I've heard so many people say, oh yeah, but they said that we had an arrangement, we had some sort of a trial payment period, end of trial payment period, it comes all unwound.
And then they say, well, you know, before you do a short sale, or, you know, you have to be behind in your loan payments. So almost encouraging people to stop making payments. But the loan modifications are suitable for somebody who was making $100,000 and for some reason is now, in this economy, is making $80,000. So needs a little bit of room to make it less, a smaller payment. And that's appropriate for someone like that, but not somebody who should never have bought that house in the first place. That's the concern.
Yeah, there's an awful lot of people who did get it because, like you said, the money was so easy. Yeah. The qualification, they weren't applying the checks that they should have before granting these mortgages in the first place.
And I think there was a lot of, and I'm not saying all consumers, but there was a segment of consumers that were very negatively impacted because they thought if my payment is $1,500 now, they didn't understand the whole dynamic that it could step up and adjust, and it could be way more than they could handle.
Yeah, there are a lot of people that weren't even paying the interest on their mortgages.
I know. Those negative AM loans.
Yeah, terrible.
Yes.
Okay, well, we're getting close to being done with our time. So do you have maybe some final thoughts that you'd like to give to our viewers today?
Well, I think real estate is a great tool to invest for the long term, and it's a great diversification strategy for people to explore, but you have to be educated and informed and know what you're doing. And so it requires taking a little step in that direction, and reading and educating yourself and surrounding yourself by people who are doing what you want to do. And our organization is definitely focused in that area.
And I think things, again, that you were talking about, like positive cash flow and so forth, if you make sure that the numbers make sense going in, that's going to help you an awful lot. But you need to be able to have a shock absorber. Okay? So, in other words, if the rent's not coming in. All right, folks, we're all out of time. I hope you enjoyed the show, and think about what you'd like to do, maybe related to real estate. And we hope you can join us next time on Financial Insider Weekly.